Did you know that St. Luke's University Health Network, based in the Lehigh Valley, Pennsylvania, has been recognized by the U.S. government as the highest performing health system in the United States for quality? You heard right. St. Luke's #1 recognition affirms our status as the top leader among the most respected healthcare providers in the nation, including Houston Methodist and the Mayo Clinic. To state it simply, if you want to receive the best care when you go to a hospital, come to St. Luke's.
Listen, all you New Yorkers. Taxi!
Okay, we're looking around.
This is the 77 WABC minicast.
Well, yesterday wasn't a fabulous stock market day, but the market has been roaring. And we're still running not quite 50,000 on the Dow, but the S&P 500, 7408. And that sort of sets the tone. That's the basic index, still record-breaking. A little bit of interest rate jitters. We'll talk about that. We have a new Fed chairman coming in. We'll talk about that. Let's see, the 10-year note is up to 460, up 24 basis points. That's a pretty big increase. Yesterday, up 11. Anyway, let's see what our experts are saying. Jack Bouroudijian, chairman of SmartX Data. Jim Iuorio, CEO of JI Financial Strategies. Two shrinking violets. I'm sure there's no opinions here. So, Jim Iuorio, let's start with you. Let's go to bonds. Everybody's talking about bonds. Front page of the Wall Street Journal. Global sell-off in bonds. Now, some people in the media are talking about the Fed's going to tighten, raise interest rates, which I think would be nutty. But anyway, what's happening here? Why is this going on all of a sudden?
I love when we start on something we agree with. The Fed tightening would be idiotic. The Fed tightening for a supply shock caused inflation will do absolutely nothing. It would be a silly thing to do. Now, the movement we've seen in long-run bonds, I think there's some troubling aspect to it. And I know it was a global sell-off, but it was led by us. And our 10-year yields going to 4.6, I think, is indicative of the market saying, because there's no way they're worried about inflation. 10-year break-evens are still 2.5%. They're not worried about inflation in 10 years. That's not why they're selling bonds. I think they're selling bonds because they realize we had a lot of bonds to sell before this conflict even began. And that's now another, I just had the note on how much it's costing per day, $1.8 billion per day for the war. So I think the market is saying if they're going to have to sell a bunch of bonds, we don't want to buy them. And I think that's a big deal. Now, we'll say how that, and yesterday you said the stock market traded poorly because of the bond market, and I agree with you 100%. But I think there's a lot of things. 3 weeks ago when we were on the show, I was bullish. Now I think there's a 4 to 6% correction, and that's just based on math. When the NASDAQ gets so far ahead of its 50-day exponential moving average, meaning sentiment is way high, it usually portends a correction to come. But again, overall, I'm pretty positive on the economy still, particularly if we can get rid of this Iran thing sooner the better.
Yeah, I mean, you got good profits, good productivity, low.
And the labor market didn't fall apart like everyone was saying it was gonna 6 weeks ago.
Yep.
I think there's a lot of real good, but again,
good jobs.
The caveat is oil.
Well, what's a little gasoline between friends?
For you and me, nothing. For 60% who don't own assets, they might be second wind a little bit, which I don't like.
Well, I do feel their pain, Jack Bouroudijian. I mean, I understand that. By the way, I do want to make a minor correction to what Jim Iuorio just said. This is not a supply shock for the U.S. We have plenty of oil, natural gas, gasoline. It's a supply shock for other countries, Europe, for example, Asia, China. It's not like the 70s. I mean, but you've got a big price adjustment because we do pay the world price. But, I wouldn't care. I mean, you can, listen, we all grew up with the long gas lines in 79 and 80. We remember that. That was a supply shock. You couldn't get any gasoline because we had terrible regulatory policies and energy policies and just about every other policy before Reagan got in. But that's why I understand the bond thing, Jack. I don't know. You think it's going to go that far? You think? I mean, the 30 years at 512, so that's very exciting. People are hyperventilating about that. But I don't know. I could get in the mood to buy bonds if I ever did such a thing.
Well, I think we got to take a step back here. You know, this market, when Jim and I were on about a month ago, the market had just made a low down around the 6350 level in the S&P. We've rallied 17% since then, all right? And what happened to crude? It spiked over $100 in WTI. What does that tell us? It tells us that the stock market could not care less about what is happening in the crude market right now. I mean, that's important to keep in mind. And the fact that we broke yesterday 92 points is just indicative of the levels that we're at. Look, you know, we're all old enough to remember the crash in 87. That was a 92-point break back in 1987, and that was the crash. And today, it's nothing more than a 1.24% sell-off. So I think we have to really take that all in stride, especially in the wake of the velocity of the move that we just experienced. Now, you hit on something, Larry, and that is earnings. Look, this market is still making money. This AI story is not something that's a fad. This is something that is generational. We're seeing it. Look, the CME the other day came out and announced these compute futures. Why? Because there are trillions that need managing risk. And we talk about this almost every time I'm on the show. That's what's driving this market. The bonds, and this is something that is more like Jim's area of expertise. I was more of an equity guy and Jim was a bond guy, but I've always seen the bond market and the stock market linked, especially when we start to see asset allocations. When we start to see money come into stocks at this velocity, it's usually coming from someplace. Well, where's it coming from? It's coming from the bond market in many cases. You see that almost tick-for-tick sell-off you did over the course of the last 6 weeks where we saw stocks going up and bonds going down. That's indicative of a large strategic asset allocation. And let's see, it could be the beginning of something huge. It also tells me one other thing, Larry, all right? It tells me that if we did not have this Iran story, this market would be significantly higher. And I'm talking maybe about 10 to 20% higher than where it is right now.
It's
so
coming.
That tells you,
Coming.
That tells you where we could go. Yeah,
it's coming. Have patience. It's coming. Trump's back in Washington, D.C., and he has some unfinished business to deal with. Okay, and it's going to have something to do with the Strait of Hormuz, without any question. I don't know what.
You know, a little bit of disruption in the short term is worth saving the devastation in the long term. I think we've all agreed on that. And there's other things happening which are very, very strange. You know, the UAE leaving OPEC, you know, these pipelines that are basically making the Strait of Hormuz, you know, a moot point. I mean, these are things that are happening as we're speaking. So, you know, over the bullets are coming out of the gun.
By the way,
first of all, we've destroyed the gun, and now whatever bullets are left, we're destroying.
By the way, just as a fun aside, UAE leaving OPEC, as it turns out, we've learned that the Saudis and the Kuwaitis and the Qataris and the Emirates have all been bombing Iran. How cool is that? I mean, really, those, you know, I mean, really, how cool is that? Strike back. I mean, we didn't know this. We were sort of, you know, Iran was bombing them, which was stupid. So Iran bombed them, so they turned off all their banking, all the Iranian, you know, IRGC bank accounts to Scott Bessent at the Treasury, who promptly seized them. But now it turns out those boys have been fighting back. I like that a lot. I just really love that. Just as an aside, you made me think of that.
Can I add something to what you guys are saying about the oil thing, too? It's because I fully believe that in a year's time, oil is going to be about $50 a barrel. And what I base that on is UAE leaving. You know, UAE's capacity, total capacity is 4 million barrels a day, and they've only been allowed to produce 2.5.
Yeah.
As soon as they increase, which is why they're leaving, other people are going to increase as well. But the problem is, we all have to admit that if this lingers another 3 or 4 months, it could reflect in the midterms, and then all of a sudden the agenda that is working and would work over time might have a hurdle. Is that a bad thing to say? Does that make Larry mad or no?
No. I mean, we'll say 3 or 4 months ahead is an eternity. 3 weeks.
Amen.
3 weeks. Where is the, Jim Iuorio, where is the 6-month futures contract for WTI and the 12-month? Where was it? It was about
They've gone up. It's flattened. I'll get it for you. Ask Jack another question. I don't have it in front of me. I hate when you do this to me.
I think it's 85 and 77, but it might be higher.
Yeah, it's gone up.
There's backwardation in that market, Jimmy. You know what I mean? They're definitely looking at it.
But your point, the other point you made, though, is very interesting. I had seen reports the UAE could produce as much as 5 million barrels a day, and the others are going to fight back, the Saudis and the Kuwaitis and so forth, right? Because they don't want to lose market share. Yeah. So you're right. The price decline could be even faster. That's a very good. Listen,
don't forget Venezuela too, guys. Remember, Venezuela is going to come back online, and that is really going to alter the oil markets globally. I mean, you could see it coming.
When's since we're deep into the weeds on energy, when does the Guyana stuff kick in, or is it already kicking in?
Oh, ask Jack that one. You stumped me twice with the Guyana story. I'm looking at
because
Iran.
Well, Chevron paid a fortune to John Hess to buy the rights to Guyana.
Right, and this is all a very big deal. You've hit it on the head. There's a lot of things falling into place in this oil story that's going to make it. It's going to flip from being inflationary, which again, longer term it can't be inflationary because it's taking money out of people's pockets. But it's going to go to disinflationary, and then join the AI story and the immigration story as being somewhat disinflationary, and rates are going to be significantly lower in a year.
And then the other point is, just as another modest correction, we may be having 4% economic growth in the second quarter, according to the Atlanta Fed GDP now. But whatever, we're going to be running 3 to 4% growth, which is actually going to reduce the budget deficit, and that's going to reduce the amount of bonds sold in the marketplace.
The market doesn't agree with that right now. They're telling you they're a little bit concerned. You give me that point, right?
The market, yes. Well, who listens to the market? I mean, wait a second. We're free. We're free market people here, so we do listen.
But the bond market's concerned, Jim, about, if you think about it, about a new Fed chief. Every time we have seen a new Fed chief, the market's tested that chief. All right, and now we got Kevin Warsh, who's battle tested. I mean, I'll give him that much. And we could not have a better guy in there. But every now and then, you get the bears out there. This is when they'll come at the Fed chief. So let's see what kind of strength we have.
What are they going to do? Like with guns, or how are they going to come out?
You know what? You see bond vigilantes come out of the woodwork. That's usually when we see them, Larry. When we see a new Fed chief come out. And the real question is who wins that battle. And right now, over the course of the next month or so, let's see. It's going to be a tug of war, and a lot of it is going to be headline driven.
Do you worry, either of you guys, that if bond yields, if 10-year goes to about 4.8, then the Fed steps back in and reinstitute, of course it's not called QE, and starts buying bond again? I think that would be a tremendous mistake, and I do think it's a possibility if bond yields keep flipping around.
Won't. Kevin won't let it happen.
Kevin Warsh won't do that.
Kevin won't do it. QE is, to the extent it was whatever it was, monetary. He's not going to do that. He's just not going to do that. I think that he's going to try to stop the crazies on the FOMC from raising rates.
Good.
That's going to be
that's inappropriate right now. Yeah.
Yeah. Don't raise rates. Just chill out for a while. Jim Iuorio, CEO of JI Financial Strategies, and we've got Jack Bouroudijian, chairman of SmartX Data. How are the restaurants doing, Mr. Iuorio?
So it's really interesting. The trends this year have been, it's like a value migration, and that's shown up in two different places. One, like the real high-end places, people are starting to substitute lower. But that's not the interesting part. The most interesting part is fast food prices went up so fast, so quickly, that people are gravitating up to casual sit-down dining. And our place, my restaurant, is right kind of in the sweet spot. People who have dialed back from fancy and up from fast food are going to our places. But there's definitely a bit of a value move and some changes this year because of the inflation, I believe.
Yeah, food prices have gone up, not near as much as energy prices, but you do have the fertilizer problem, Jack Bouroudijian.
Yeah, well, that's the one part of the commodity story that's the unknown. In fact, that's what's throwing kind of a big hole in everybody's budget. So I think, again, it's temporary. We know that. This is something that isn't going to last. But more importantly, I think it's also making these supply chains look for alternatives. We realized that there were certain things that we were still very dependent on that were coming out of that Persian Gulf. And now all of a sudden we're starting to realize there might be other ways and workarounds. And I think that that's very important. So, but before I do leave, I want to say one thing. I'm ashamed to say I've never been to Jim's restaurant, but
Please.
I understand it's probably, without a doubt, the best cheeseburger in the northern Illinois area. That's what I've been told. Okay.
Thank you, Jack.
I was just going to ask if you'd ever been to any of his restaurants.
You know what? Unfortunately, I've got a wife that likes to cook, so I like to stay home and eat her cooking.
Jack's cousin is a regular there, so we talk about. Jack has often talked about in my restaurant.
I'm not going to ask what they say. That's beyond the scope of this radio show. Can I say, CBOE, I just found this, the Nigerians have got me looking at VIX. VIX, even after yesterday, VIX is 18. Isn't that a low reading, like not to worry reading?
Absolutely. That and gold are telling you not to worry. If gold were spiking back up over $5,500 and we saw the VIX at 23 or 25, I'd say, yeah, we got something to worry about. But these are market indicators that are telling you, you know what, take it easy, take a deep breath. All right, the sell-off was nothing more than a bull market.
We all agree that if VIX goes too low, the fact that nobody's worrying makes us worry more, right? So I think it's at a nice level at 18. It's a little higher, on an average basis than it was the last couple of years, which is fine. And I think that it should be. If it's higher in the shorter term, that makes the long-term rally more durable.
Actually, gold has had a bad war. Gold's done very poorly in this war.
No, that's because there's no fear. There's no fear like there used to be. And same with crypto. I mean, you're not looking at those markets that should be running in these conditions.
By the way, Scott Bessent has seized all the crypto from the Revolutionary Guard and all of the crazy Nazi people. Good for Scott Bessent. Gentlemen, thank you. Jack Bouroudijian, appreciate it. Jim Iuorio, ditto. Folks, we'll take a break and do some money in politics with Liz Peek and Steve Moore on the other side. Please stick around. I'm Kudlow.
The Larry Kudlow Show on the Red Apple Podcast Network.